Tourmaline is the largest natural gas producer in Canada, fourth largest Canadian gas processing midstream operator. This is often not known about them. 5.5 billion BOEs in 2P reserves, almost 25 TCF in gas, and 1.3 billion barrels in liquids. Lowest capital cost operator in the basin. That's what kind of they're known for being very low cost of supply, lowest net emissions, and peer leading cash flow growth, free cash flow generation. Very popular among investors. Investment grade triple B, largest insider ownership among senior E&Ps and peers. Mike Rose is a legend. Everybody knows him. Market cap for the company as of April 15 is 22.7 billion, a little bit less right now. Net debt in Q1 2025 is 1.8 billion, but if you remove the Topaz equity stake, is 1.1 billion, which makes the enterprise value closer to $24 billion at 23.8. The cash flow is 3.9 billion annual in 2025, and the free cash flow is about $1 billion. This suggests if you do the calculation, free cash flow over enterprise value, you will get free cash flow yield of about 4 to 5% in 2025, 2026. But because it's a growth story, want you to take 2025 free cash flow yield plus the organic production growth for future benefits, which really results in a yield of about 12%. Total payout ratio is about 101% in 2025 and 92% in 2026. The dividend yield is about 3% as well for base and TTM base. And when they do the specials, which they're very known for, it's closer to 6%. So once in a while, once a quarter, you will have earnings, and they will say the yield like 50 cents or $1 at times. So it's really fascinating. As mentioned, 5 million net acres, 5.5 billion BOEs, 2P reserves, and 75 years of drilling inventory. So we're talking about a large player in the Montney when it comes to gas and condensate producer, which is the third largest Montney producer, Peace River, and they have 3 massive operated complexes de-risked, including the Alberta Deep Basin, largest Deep Basin producer, basically in the Deep Basin. Peers, Tourmaline is the largest natural gas producer in Canada. In the chart, you can see number 1, basically close to 3 BCF a day. That's their production. Next one will be CNQ and ARC Resources. And you can see how they compare with some peers in the US. So very large scale producer in Canada and the world. Scale is a key component in driving down costs. That's what they're proud of. Leveraging transport marketing opportunities and remaining relevant in the current market environment. And they're known for some of the recent M&As with Crew Energy and acquire some Strathcona assets. Is not only a gas producer, it's also a significant liquids producer in Canada with continued peer-leading growth. They're basically third largest producer in conventional liquids. So they don't produce heavy oil, they don't produce oil sands, bitumen, they don't produce that, they produce light ends. And the third largest condensate producer, and the largest producer of NGLs, so natural gas liquids, so over 50% larger than the next closest peer. And they're planning on strong liquids growth with the first phase of the North and South Montney development in the AP growth aiding over 20,000 barrels per day, predominantly condensate and pentanes-rich liquid production. So pentane will be part of condensate. So they basically, maybe there's partitioning of hexane as well. And so what they also say they produce about 162,000 conventional liquids, the third largest conventional liquids producer, third largest condensate producer, and largest NGL producer. And the growth that they have on their assets, this is really a growth story. You can see Spit River, Northeast BC, and Deep Basin kind of partitioning when it comes to their flow rates. And they're really driving kind of growth as part of the strategy. Many people are not happy about that, but many are. So production in BOEs in 2025, they expect to close at 650,000 BOEs per day, 2027, 735,000, and by 2029, get to 750,000 BOEs per day. A-tax cash flow going from 3.9 to 3.2, and after-tax cash flow per share diluted going from $10.44 to about $8.60 by 2029. And the capital program is fairly steady, kind of ranges between 2.3 to 2.7 billion, with 2025 spent being somewhat more on the higher end. And the free cash flow assumptions, they're close to that billion mark. And the base dividend is steady at $750 million, with declaring special dividends at $260 million in 2025 so far. Ending surplus net debt reduction, basically going from 1.7 or so billion towards 0.8 billion by 2029. Insider ownership in the stock. Therefore, there is significant incentive in distributing dividends, basically. So majority of Tourmaline's free cash flow will be returned to shareholders in the form of growing base dividend, and special dividends will be preferred method for shareholder return. And that's fully aligned with the kind of corporate holding of the shares. So free cash flow and dividend per share is specified basically below, and the majority of future free cash flow will be returned to shareholders. Portfolio, they talk about South Montney basically going 60,000 to 75,000 BOEs per day potential. South Deep Basin, 20,000 BOEs per day potential in 2025, 2026. North Deep Basin, 15,000 to 20,000 BOEs per day expansion with the Kakwa facility expansion in 2025. Peace River region, 5 to 7.5 thousand BOEs per day potential there, and North Montney Conroy, 75,000 to 100,000 BOEs per day potential. Really prides itself with that they own the largest, lowest development cost transport integrated natural gas reserves, and this will increasingly dominate the energy space in the next 20 to 30 years. So when it comes to Tourmaline basically owning and operating 3.2 BCF a day of gas processing infrastructure, they have about 25 TCF, so TCF of 2P reserves, and the basically large major player in North America when it comes to that. And they have a very good network of basically processing a lot of gas in North America. Tourmaline is very proud of them having continuous capital efficiency improvement. In 2021, for example, $8,000 per flowing were kind of the cost in the capital, and trying to maintain best-in-class capital efficiencies, even though despite inflation, the cost per dollar per flowing is going higher. It was a little bit lower at $11,500 per flowing in 2025, being reduced by $300 per flowing since 2024. Aspects that Tourmaline is known for is their natural gas transportation and marketing strategy. So in 2025, they have 40% hedged, about 5% is JKM TTF. US Midwest is about 3%, 8% is Dawn, and 11% is PG&E. 16% is AECO, and this portion is going to be increasing to 39%, and then subsequently in 2027 to 52%, and remain there at 2028 as the hedges come off and more exposure to AECO is realized. 2026 exit, 1.2 BCF a day of gas will flow to US or other markets, and in 2027, 62,500 MMBTU per day of new JKM exposure commences. 2025 guidance, their production is expected to be between 635,000 barrels per day to 665,000 barrels per day, or BOEs per day, because they produce light oil and natural gas, so barrels of oil equivalent. The cash flow is close to $4 billion, so 3.9 billion. Cash flow per share diluted is 10.44 at midpoint. E&P capital program between 2.6 to 2.85 billion dollars, and capital expenditures basically between 2.85 to 3.1 billion. And free cash flow based on those calculations, once you take the cash flow minus the expenditures, or adjusted funds flow minus the capital expenditures and OPEX, you end up with $960 million. And as we calculated before, this is basically needs to be accounted as part of the growth program, which directly yields about 4 to 5% free cash flow yield. But if you add the growth, then you get closer to 10 to 12%. Overview of Tourmaline Oil. Thank you so much. Not a financial advice. Please like and subscribe. Thank you.